So, we have seen some very interesting developments in Bitcoin's charts I want to share with you guys. We have seen a slow but steady uptrend ever since we established our bottom of 49k in early August. We had a low, a high, a higher low, and now, after grinding against our previous bear flag support turned resistance line for an entire week, we finally have a higher high. Not compared to these tops over here, but at least in this shorter term trends. And our weaker short-term trend of accelerated decline has been slowed down significantly, bringing these much more important resistance areas back into play. One of these is the sloping downtrend resistance line over here. The other one is this entire price zone of highs since we put in our top. If Bitcoin manages to crush through this zone and build support on top of it, I will be ready to get extremely bullish for a next leg higher on our journey to the top in late 2025 or so. This would essentially mean that this entire move was just a bullish bull flag or descending broadening wedge consolidation pattern, depending on how you draw your support or resistance lines. However, it is too early to start celebrating just yet. We still need to see confirmation that the bullish case will actually play out. In my view, it would not be wise to put in longs over here because we have not broken out of this pattern yet, and you would be longing potential resistance over here. Therefore, the risk to reward for that isn't the best here, in my opinion. Now, let's look at the potential bearish perspective. This rebound kind of reminds me of some other continuation patterns I've seen before. As you can see, these were patterns called flats, where there are two similar tops and bottoms in a row. Expanded flats can have the second top go higher, but it still typically is a continuation pattern. We don't have any confirmation of this pattern yet, but it's a good idea to keep an eye on it because they typically continue in the direction of the move that preceded the flat. In this case, it could potentially continue in a bearish direction if the flat does not get invalidated with a breakout. As mentioned before, the other bearish signs include the fact that we have not yet defeated this downward sloping resistance and the general resistance zone all the way to the all-time high. Now, that being said, I want to emphasize that our power law signals always take precedence over classical TA when we're analyzing the markets. Giovanni makes long, informative market updates discussing the indicators in depth. So I aim to have a slightly different, complementary approach of creating shorter market recaps combining our power law indicators with classical TA and news, giving you a compact, well-rounded view of both shorter and longer-term trends. So let's get to our indicators to have some more clarity. We are continuing our bounce from the blue power law trend deviation line. This is the second and largest bounce off of it so far. However, the bulls have to wish for this retest to look something like this, and definitely not like this. In terms of timing, we're almost at the exact spot as this retest. However, this was similar to a left translated cycle, so anything can still theoretically happen. The Bitcoin power law clock gives us a current time of 8:14. Only 46 Bitcoin minutes left until 9 o'clock, which in human terms is about 3 months. Now to the Bitcoin power law oscillator relative to trends, which is at -16. The color of the current price is pretty muddy and somewhere between yellow and green. Therefore, the current value proposition is not as amazing as these green levels, but not that bad either. It is still at a discount relative to the trends. The local Hurst exponent is getting closer and closer to the bottom and has turned light green, but there's still a bit of time left. Take note of this vertical blue line, which indicates where 9 o'clock is. Perhaps Bitcoin will have a bit of a prolonged bottom like this. Now for the topic of today. Let's analyze the probability of the bottom being in by comparing the current bull market correction to some of the largest past examples. So, our current bottom is around -33% from the top. And let me adjust the scale over here and look at some of the past examples in our previous market cycles. So, in our last market cycle, we had a 31% correction over here, but it was towards the top. Then we had a 73% crash, which was completely crazy. That was the COVID crash, but that was more of an exception. Then we had a 40% crash over here, another 40% crash here, there, 33% over here, 40% over here, another 40% correction. If we go back even more in time, we can see that this was pretty crazy over here. It was 81%, but if you count that as a bull market correction, which it kind of was over here, because this was the actual top. Then before that, we also had a 50% correction and another 46% correction. But Bitcoin was a lot more volatile back here because it was a lot newer. As you can see, the most common bull market drop percentage is somewhere between the low 30s and 40%, with a 40% drop being slightly more likely. The only exceptions to that were when Bitcoin was new and during the much more recent COVID crash over here. The reason why the 40% crashes are the most likely is because they typically line up with the 61.8% Fibonacci retracement. We could speculatively do the same thing over here by drawing it from the bottom over here to the top over here. And as you can see, if you draw it from the bottom, it will be 37K. If you draw it from this bottom over here, for example, it will be a little bit higher in the low 40s over here. But nothing guarantees that we will actually drop that low. The bottom could definitely be in here at 33% because we had other similar crashes. So, what is my current opinion after analyzing all of these different aspects? Honestly, you could say that I'm almost neutral. If you put a gun to my head though, I would probably still lean slightly bearish for the very short term, only because we still haven't broken through the resistance areas over here, and we're not at 9 o'clock yet. The bulls have very good chances, however. The short-term trend is bullish, and the bears have been wasting a lot of time. 9 o'clock really isn't that far anymore, so the only way the bears could pull off some kind of larger drop was if it was very fast and violent like the COVID crash. The longer the bulls are able to keep the price at these levels, the more hopeless the situation becomes for the bears. You have seen me go from bearish to slightly bearish to very slightly bearish throughout this crash. It is important to always be open-minded when analyzing the markets, and you need to have the ability to change your opinions and take decisive actions as the market conditions change. I don't want to point any fingers, but there are still some YouTubers out there calling for 4K or something throughout this entire uptrend from 15K. This is completely delusional from the standpoint of Bitcoin's power law. Imagine all of the potential profits wasted by being too stubborn. I and probably a lot of you have also made similar mistakes in the past, so I know what it's like. This is why I've still been following my plan and buying throughout this entire dip, and I will be ready to become very bullish on a dime if the previously explained conditions are met. Bitcoin will do what it wants to do. All of this reminds me of a quote from Bruce Lee. Empty your minds, be formless, shapeless, like water. If you put water into a cup, it becomes the cup. You put water into a bottle, and it becomes the bottle. You put it in a teapot, it becomes the teapot. Now water can flow or it can crash. Be water, my friend. If you would like to support our work, feel free to subscribe to our amazing Lux Algo indicators or check out our merch store. I will leave the links in a pinned comment below. Your support really means a lot to us. This is Saverio speaking, and as always, thanks for watching.